course, come on in. The water's fine. The Dow and Nasdaq soaring to new all-time highs as Treasury spreads hit the highest level since July. So is the bond market signaling it is time to take off the life jackets, jump back into this record rally? We mentioned the yield curve, Pete, but actually, if you look at the 10-year yield, 1.86%. German bonds are back to July highs. We're getting the all clear.
Financials are on fire. JP Morgan went over 130 today. All across the financials, you see these great gains. And also, it's, basically we talked about yesterday, but I'll say it again. Earnings season's a little bit better than expected. And volatility is just getting sucked out of this market right now. I mean, we were talking about 18s, 19s just a couple of weeks ago. Here we are in the 12.5 to 13.5, call it 14. I mean, this is amazing, Mel, how quick people have digested what's going on. And then in the options market, the one area that I keep seeing more and more and more, energy. People are going after some of these areas. And energy, if you're looking at beta and you're looking at volatile different names in there, that's where we're seeing it. We've had over 40 different stocks hit over the last 2 weeks in the energy space alone with unusual activity, looking for upside. And they're already getting it. And it's happening in days, not weeks. And they're going very, very short term.
And is that a product of worst is first now, that where you see the laggers being bought just for that beta play that you're looking at catch up? But just, how did you start off your segment right there? You said earnings not as bad.
Right.
China trade not as bad. Yeah. Fed better than expected. You have a host of things. Impeachment kind of rolling off the market's back right now. Everything is not as bad. So that's why people are buying.
So does that equal record highs?
Well, if you look at industrials are breaking out to record highs, and people aren't talking about that. They're talking about the more exciting, and the banks maybe should be more exciting. We've been waiting for the banks. So back to bonds. There's a couple things that are going on in the bond market. First of all, we do have record supply coming also. So there is a supply issue which would put some heaviness on yields if you don't think that actually you can digest all of this. In the past environment over the summer when yields were hitting lows, there was no question we were going to digest it. So when you think about the dynamics, and we had an ISM services today. So we've been watching this part of the U.S. economy to see if it's been at least falling back. And it couple times over the last 3 or 4 months, that's been a trigger for the market to be very cautious. The numbers today weren't great, but they were better than expected. You had a China PMI last night that was slightly better. I think you're getting stabilizing PMIs. Most importantly, I think you've got sentiment for the equity market that we haven't seen in a long time. And I'm not going to tell you we're at January 2018, but it does feel what's your measure? The CNN Greed Index. There's an AAII coming out tomorrow. You should watch that because the sentiment is part of where we have come from, which was so bad that I think that's playing into stocks.
Yeah. How do you feel about the markets right now? We've come a long way in a short amount of time.
Really long way in a short amount of time. And I mean, kudos to you. I know you were positive when trade was looking terrible, and I was far more concerned. However, all that having been said, that was 6% ago in the S&P. It was also only about 3 weeks ago or so.
8%
right?
in 23 sessions off those OC3 lows.
Okay, so that is extraordinary. We talk about, okay, great, the bond, the yield curve has shifted or steepened, and that's really good for banks. JP Morgan's up $18 in the last 3 weeks. That was the time to own more JP Morgan, I think. Here, yesterday I sold some 130 calls against my position. I love JP Morgan. I think it's an outstanding company.
How far out do you go on that?
Just 2 months. I think that it's a really nice run. I don't think it's crazy expensive here, but I also think $18 move in a stock like JP Morgan is really a pretty extraordinary move. So, I mean, to me, any protection I had is going to zero, right? The volatility, as Pete said, has gotten crushed.
Happily.
Yes, right. I'm always long, so when the market's up, that's great. And when it's not, that's not so fun. But I'd be inclined to just
I agree with Karen. Last week, I said the market was very close to being overbought in RSI. I said 10 handles away. I catch 30.80 as an overshoot level. So we're battling with that level. I think it's time to lock in some profits, but I do believe that there's going to be a reassessment and people will ultimately buy it back.
Well, it's a great opportunity to trim.
Go ahead. I just add one more. United Rental. I think it hit about 108. It hit 150 today. Right? In a very short time. I love United Rental.
Yeah.
It's not expensive here, but that is an extraordinary run.
Okay, so if there's going to be a pullback, I mean, you're going to time it because you're a fast
very short term, and I'm
fast money trader.
And it's faster than ever, Mel. If I gave you just a small synopsis of what we saw in the last couple of days, we are seeing more and more paper that's coming in that's expiring Friday. I mean, I'm talking about they are ultra short term. But they've been so successful with these trades, it's been scary. They've been right, week after week. You guys talk about this big move. How about the guys who are buying the options on Monday that are expiring that Friday? and then the next Monday expiring Wednesday last week, and then expiring on Friday, 2 days later. That's the kind of market that we're in right now, and I think it's partially because do people really trust it? Especially at the levels that we are right now.
Can I ask him a question?
Yeah.
No, I'm not allowed to do that. I mean, sorry to do that.
What is this?
So at what point when you see that kind of either put call skew or something that's wildly bullish in terms of the positioning right now, do you say, the contrarian in you say this is getting dangerous? Because that's what my spider sense is tingling right now.
What I really like about it, though, Tim, is it's not so much about put call ratios, because those never mean anything to me. It's all about buys, right, and sells. So are they selling or are they buying? They're buying.
Yeah.
And the buying's been very short term, but they've been right, and they continue to be right. So I'm going to keep riding this thing along. I mean, I'm trimming like you were talking about, Karen. You sold some calls in JP Morgan. The only problem with that trade is, obviously, implied volatility has gone like this, right? So you're not getting paid as much as you would like to for those options. But I've been trimming a lot of these options, Mel. Today it was Wells Fargo, it was Morgan Stanley. I love those names. I still love those names. I think they're going higher, but it's a great opportunity to take some off.
So can I ask a question now?
I wish you would. I think everyone is wishing that you would.
So I have a question for Grasso. I mean, if you think that there's a chance that we see a pullback at this point, when does seasonality kick in? And are you better off trying to trade that pullback or just stay long, ride that pullback, knowing that seasonality will take you back to record highs?
If your time horizon is 5 years, then just stay the course. If your time horizon around this desk is pretty quick, then I think you trim in November, get long again December, and that's the way you play it. To Pete's point, Ulta, Roku, Snap, all up 20, 30% in 6 days.
Wow.
So you can make your year in these individual events really quick. So you have to be able to buy them, sell them quick, and don't fall in love.
Or you can lose your years in a short amount of time with a quick pullback.